Hello everyone. I hope my video finds you very well, very active and very happy. In video number 6 in series of internal auditing, we talked about the performance standards as per IPPF. Today in video number 7, we will talk about 5 topics related to corporate governance. Definition of corporate governance, rules of corporate governance, types of stakeholders, responsibilities of corporate governance, and 3 lines of defense. Corporate governance involves a set of relationships between a firm's management, board of directors, shareholders, and all other stakeholders. Corporate governance also provides the structure through which the objectives of the firm are set and the means of achieving those objectives and monitoring performance are determined. So you can say the corporate governance is all tools used by management and board of directors to achieve the main objectives of the firm through the relationships between all stakeholders. Corporate governance is to ensure that business is conducted properly, adhere to rules and regulation, following guidance and instruction. There is effective and equitable usage of resources to ensure sustainability of an organization's strategic objectives. Now, let's talk about rules of corporate governance. Board of Directors must identify carefully the key stakeholders of the firm and understand their needs. So, the responsibility of the Board of Directors is to identify, first of all, the stakeholders of the firm in order to achieve the main objectives, the strategic objectives, and the operational objectives of the firm. Board of Directors provides direction to management, empowers them to take actions, and oversees the results of the performance. The daily governance works should be executed by management, taking in consideration risk management activities. So, big part of corporate governance is the risk management. How to control and mitigate the risk of the firm is massive part of corporate governance. Internal and external auditors provide the board of directors and the management with assurance regarding governance activities. Here, the rule of internal auditing is to issue assurance report regarding the effectiveness and the efficiency of corporate governance. Types of stakeholders. We have 2 types of stakeholders, direct stakeholders and indirect stakeholders. Direct stakeholders directly involved in the operation of the business, for example, board of directors, top management, employees. But the indirect stakeholders not directly involved but affected by the outcomes of the business, for example, customers, suppliers, creditors, governments, labor unions. Responsibilities of corporate governance. The board of directors establishes a governance committee, may be done through the audit committee. So the board of directors is responsible to establish a corporate governance committee belonging to the board of directors, or the work of this committee gonna be done through the audit committee. Management must understand board expectations and identify and manage risks. Key steps for management: establish a risk committee, maintaining reporting requirements, reviewing the governance process on the regular basis. Now, the responsibilities of risk owners: evaluate design adequacy and operating effectiveness of risk management activities. So first of all, the risk owners are required to identify the risks, measure the risks, put the correction plans or controls in order to mitigate the risks. Assess and report on risk management capabilities regarding assurance activities. Provide independent and objective assurance regarding risk management, design adequacy and operating effectiveness. Assess adequacy of risk reporting to management and the board. So again, the rule of internal auditing to assess the risk management, and corporate governance, and the issue report with all gaps or weaknesses to the board of directors and the top management. Last part of this video, which is 3 lines of defense. Defense against what? Against risks. So we have 3 lines of defense. First line is the internal control activities done by management. Second line of defense, other assurance services. And last line of defense is the internal auditing. As you see here in this table, the first line of defense reporting to the senior management and the senior management reporting to the board of directors. First line of defense is rules of management and internal control system. If there is any remaining risk after first line of defense, gonna be the responsibility of the second line of defense. Financial controllers, compliance services, quality assurance, risk management, health and safety. If still we have remaining risks after second line of defense, these risks gonna be the responsibility of internal auditing. And the internal auditor will issue the report directly to the board of directors or the audit committee. Now we have the true and false question. If you know the answer of this question, please put your answer in the comments below the video. Corporate governance is to ensure that business is conducted properly, adhere to rules and regulations, following guidance and instructions. Is it true or false? This is the end of this video. Thank you so much, and bye-bye.